Thank you for joining us for today's webinar on navigating OTC markets, a pathway to capital for global issuers. This event is organized by the Financial Regulatory Commission of Mongolia, OTC Markets Group, Mongolian Association of Securities Dealers, and Capital Markets Mongolia. Your participation and expertise are greatly appreciated. So before we begin, let me introduce myself. I'm Timurhoik Batsur, Head of Registration and Licensing Division of the Securities Market Department at the FRC, and I'll be your moderator for today's session. And the objective of this webinar is to provide all market participants and potential issuers for comprehensive information about the OTC Markets Group, including the application process and trading requirements and overseas issuers. So today's agenda is that first we will welcome opening remarks from the Mr. Bayırsehan Demirtaş, Chairman of the Financial Regulatory Commission of Mongolia, and Mr. Stephen Shipley, Vice President at the International Corporate Services of the OTC Markets Group. Quick note, Stephen's presentation will have TA session at the end. Please type your questions in English in the chat section so we can respond accordingly. And also today's webinar will be in English. So now let's welcome Mr. Bayırsehan to share his opening remarks.
Can you hear me now?
Yes, we do.
Okay. Very good afternoon, everyone. Actually, in US, I guess it's very pleasant morning, right? Okay. First of all, I would like to extend my warm greetings to all esteemed market participants who have been joined us today for this webinar. I also would like to express sincere appreciation to OTC Markets Group, Mongolian Association of Securities Dealers in the Capital Market Mongolia, for their support in organizing this webinar. Today's webinar, a collaboration between FRC and the OTC Market Group, aims to provide comprehensive understanding into the opportunities available on the OTC Markets Group. We will explore various topics such as OTC markets listings in the application process, trading requirement for overseas issuers. In the recent years, amid global economic and geopolitical tensions, we are facing a period of uncertainty affecting trade in financial markets. However, Mongolia, its economy primarily reliant on the mining industry, stands resilient, sustained by stable macroeconomic conditions. This improvement can be attributed to rising prices of its key export commodities in the global market, leading to increased exports income. For instance, in the first half of 2024, Mongolia's GDP reached 37.4 trillion MNT, marking a almost 21% increase compared to the same period of the last year. At the same time, the total revenue of the government budget for the same period amounted to 15 trillion MNT, an increase of 3.9 trillion MNT, or we would say 35% increase from the same period of the previous year. In terms of monetary policy, as a result of implementation of strict monetary policy and the measures taken to limit the inflation growth by the central bank, and the inflation has decreased to 5.1%, and it's being kept at a relatively stable level. Mongolia's capital market has also expanded rapidly in the recent years, especially within the last 3 years, I would say, marked by the substantial increase in the new types of financial products and services. There has been significant growth in securities trading activity in the number of professional investors as well. And I am pleased to say that these changes accompanied by legal framework that aligns with the international standards, contribute to the emergence of a favorable market environment for foreign investors. For instance, we have witnessed the introduction of a first dual currency bond, pioneering digital bonds, utilizing fintech, the first green bond, and the first domestically credit rating bond as well. Additionally, the market has been launched of first open-end and closed-end mutual funds, as well as exchange-traded funds. Furthermore, asset-backed securities have been introduced, complemented by the IPOs, systematically important banks, and the recent banking reform. In the regulatory landscape has also adapted to include the mining products commodity exchange in the associated brokerage regulations. In addition, the recent amendments to the loan securities markets are expected to establish solid legal framework, introducing new products, services, and technologies from the international market into Mongolia. This initiative aims to simplify the process for the companies to secure long-term financing through the capital market, potentially increasing investment. However, moreover, these changes aim to enhance the attractiveness of Mongolia's capital market to both domestic and foreign investors, thereby stimulating cash inflows and fostering capital market growth. As a result of these measures, the capital market value peaked to 12.1 trillion MNT by the third quarter of 2024, equivalent to 17.19% of the GDP of Mongolia. This represents a remarkable 1.2-fold increase compared to the same period in 2023. Looking ahead, our top priorities include integrating Mongolia's capital market with the global market, providing policy support for domestic enterprises to access international financing, and improving taxation and regulatory frameworks to attract both domestic and foreign investors. Towards achieving these goals, we are actively pursuing initiatives such as supporting public companies to cross-list and issue depository receipts on both Mongolian and foreign exchanges, encouraging the English disclosures for listed companies, and improving investor relations in the market. The Financial Regulatory Commission remains committed to fostering the dynamic and investor-friendly environment through progress policy measures and the reforms. We are totally confident that the closer collaboration between Mongolia and the international markets will yield mutual benefits and push our capital markets to new heights. And within that, I wish you all in success in today's webinar, and thank you for listening.
Thank you for your wonderful welcome speech, Mr. Chairman. As you mentioned it in your welcome remarks, I hope today's webinar marks an important step in fostering our collaboration between FRC and OTC Markets Group. So now, moving forward, I would like to invite Mr. Stephen first. I would like to briefly introduce his background. Stephen leads the business development and client relationship team for the Asia-Pacific region at the OTC Markets Group. In this role, he provides foreign issuers with the streamlined alternatives for accessing US investors through the OTC QX and OTC QB markets, and helping the companies to reduce the cost and complexity associated with being publicly traded company in the United States. Stephen also supports the companies in enhancing their trading value through OTC Market Suite of IR tools and services. He spent several years living abroad in Hong Kong and Singapore and has worked extensively throughout the Asia region, Prior to joining OTC Markets in 2024, Stephen spent over 15 years in bone and arrow only in the capital markets and compliance space, assisting foreign companies listing on US exchanges. So, Stephen, could you please walk us through the OTC Markets Group, the step-by-step application processes and the trading requirements and best practices for overseas issuers? The floor is yours.
Excellent. Well, thank you so much. Can you see my screen?
Oh, yes.
Excellent.
Yes, we do.
Thank you very much, Mr. Batsuri and Mr. Chairman, for having me on the webinar today. It's really excited to be here. Again, my name is Stephen Shipley, and from OTC Markets based here in New York City, where if you are in Mongolia, your day is finishing up and ours is just started. I'm very excited to be here to speak to you about the benefits of the OTC markets and the requirements for applying to list and trade here. Again, I wanted to thank the Financial Regulatory Commission of Mongolia, the Mongolian Association of Securities Dealers, and Capital Markets Mongolia for both organizing and promoting this event today, which is very important to us. This webinar is really the result of conversations that we first had in April of this year when OTC Markets hosted the FRC, MASD, and CMM in our offices. It was great opportunity to meet and learn more about each other and discuss the goals for Mongolian companies to improve their reach into the United States, which included opportunities to assist Mongolian companies in accessing the US capital markets, which was very similar to the comments that Mr. Chairman just made regarding the connectivity of Mongolia to the rest of the United States. As some of you on the webinar may not be familiar with the OTC markets and what we do, I thought I'd spend a few moments discussing our business and the opportunities for Mongolian companies, both large, small, and emerging. So the OTC Markets Group has been around for approximately 100 years and really started its modernization back in the 1990s when our current CEO launched electronic quoting of securities. OTC Markets is the largest stock market in the United States for non-US equities. We are home to more international companies that want to trade their shares here, larger than the New York Stock Exchange or NASDAQ, which a lot of people don't know or don't realize. We have a market capitalization of 27 trillion US dollars and $386 billion of annual volume that trades through our market. And between the three markets we operate, over 12,000 securities trade here. Of these 12,000, approximately 85% of these securities are non-US equities, one of which is Step Gold from Mongolia, which trades on our high SQX market, which we're very proud to have as well. What makes us different from the New York Stock Exchange and NASDAQ, and what makes us attractive to international companies like ones in Mongolia, is that we're known as a secondary trading market. The two other boards, New York Stock Exchange and NASDAQ, require issuers to be SEC registrants, Sarbanes-Oxley compliant, reconcile their financials in US GAAP, along with other costs and complexities which with being registered in the US. So it adds a lot to the companies. For us being a secondary market, this gives international companies the opportunities that are listed locally, in this case Mongolia, to have their shares traded here in the US without these complexities. You know, our goal has always been to have international companies fly their flag with the national pride of being listed in your local market, with the ability to trade here in the US using a US ticker symbol in US dollars during US trading hours. We have a term that we use that encompasses this philosophy of being, you being national heroes, which is list local and trade global. We tier our markets based on the level of financial disclosure that companies provide to OTC markets. So we have three markets here. One is the QX market, the QB market, and the Pink market. The QX market is our highest market where some of the largest companies in the world choose to trade. These over 630 companies include Heineken, Adidas, Roche, Lufthansa, very well-known brands that choose to trade on our markets rather than being on an exchange piece. QB is our market for venture companies and early stage and developing ones. Many of these companies that are on our QB markets move up to our QX market over time once they grow and they qualify. This includes over 1,100 securities from around the world. The QB market allows companies the ability to grow in the US. And unlike being on NASDAQ, where you would be say a small fish and a large pond, where all the liquidity of trading moves into the US out of your home market, OTC, QB, and QX as a secondary market is where you would see liquidity flow back into the home market. So international companies that qualify for trading on OTC, QX, and QB do so using an exemption known as SEC Rule 12G32B, which is a name that doesn't really roll off the tongue very easily, but it's important for our market. This rule exempts international companies from having to register their securities with the SEC and adhere to this disclosure and the financial requirements, as I mentioned before, which adds, again, both time, money, and cost to being a publicly traded company in the United States. This 12G32B rule allows companies to use their home disclosures to trade here. And this rule requires that companies be in compliance with your home market. They translate their disclosures and their financials into English, and they furnish these documents to OTC markets where they can be disseminated and accessed by US investors. So that's one of the main differences there. We're really not looking to have a lot of duplication of effort on your side. The local market are the ones that provide most of the rules for you to adhere to. And so we respect those rules, as we'll talk a little bit later about the different exchanges. So at this time, I'd like to go into the eligibility standards for companies that would like to qualify for the OTC QX and QB markets. The application process is very similar for both tiers. So this slide you're seeing right now, the eligibility standards, is where the requirements for the companies that want to list on the exchange. So the first bullet point mentions the term qualified foreign exchange, or QFE as we refer to it. Examples of international QFEs include the HKEX in Hong Kong, the TSX in Toronto, where Step Gold is listed, the LSE in London, and the SGX in Singapore. The OTC markets is currently in the process of evaluating the Mongolian Stock Exchange to be able to qualify as a qualified foreign exchange in the very near future. So we are going through this process, which includes, as it would be for other exchanges, to confirm that the MSC has the appropriate governance and disclosure protocols in place so that these same disclosures can be used for the OTC markets. So in addition to the eligibility standards you're looking at, we have a minimum bid price of 25 US cents at the close of business for each of the last 30 calendar days, have at least 50 beneficial shareholders, each owning at least 100 shares, have a public float of at least 10% of the total issued and outstanding shares. The company is incorporated outside of the United States, not a shell company or a blank check company, not subject to any bankruptcy or reorganization proceedings, having a global capitalization of US $10 million, and not a penny stock. And I'll talk to a little bit about the penny stock rule on the next slide here. So in order to qualify for the penny stock rule, a company needs to meet one of the three exemptions. One is net tangible assets of $5 million if less than 3 years in operations, or $2 million if more than 3 years of operation, or having revenue of $6 million over the last 3 years, or having a bid price of $5 and one of the items below of net tangible income above 500,000, net tangible assets of US 1 million, revenues of 2 million, and total assets of 5 million. So in order to qualify, a company needs to meet one of the exemptions there below. For the QB standards we have, they are pretty much the same as the QX standards. The main differences are that they are not subject to the penny stock rule. We don't have a minimum market capitalization requirement. Many of these companies are growing companies with not yet realized revenues. And the minimum bid price, unlike QX, which is 25 cents, our minimum bid price for QB is 1 cent at the close of business for the last 30 calendar days. So the application process we have is pretty straightforward. One of the things we advise companies to do beforehand they apply is to gather materials, list of officers, directors, 5% control persons, owning more than 5% of the company, including the birth and address, because we have to do background checks for these officers. The number of shares owned by directors, officers, and 5% control persons, and a recent shareholder list by your registrar or transfer agent. So once you have these materials ready to go, it makes the application process pretty straightforward. On this slide, the OTC Markets application is done online where sections are completed and supporting documents are uploaded. This is a public-facing website where anyone can go on and create an account. And there are 15 steps involved in the QX application process, which I will go through here, which is pretty straightforward. The application piece will tell you what information is missing, what areas have been correct, which pieces have been completed to make the process go straightforward. So there's not a lot of sending in a lot of paper or doing other types of activities that slow the process down. So the first step in starting an application is to provide basic company information, including address, contact, home exchange information. Next step is confirming the company's audited financials, ongoing operations, etc. One of the requirements of QX is having audited financials. Step 3 is the reporting standards, confirming your standard, whether it's international reporting or SEC reporting. As I mentioned before, there is a cost to being compliant with the SEC. With that said, there are a number of companies that trade on our markets that don't have another market, but they are SEC compliant, and it makes trading on our market just the same as if you would have SEC compliance or having international reporting. Again, for the companies to be on our markets, they don't have to convert their financials to US GAAP or the other requirements as the other exchanges have. Talking through the financial standards, which is done through an interactive widget on our side to determine where you apply there. A list of the officers, directors, controls persons, and service providers as well. If, what your securities counsel is, investor relations firms, if they're available. Next step is to provide security details that you currently have, the number of shares you have issued, the ones restricted, and the ones in public float, security ownership, the number of shares owned by officers, directors, 5% control persons, discussing any type of legal or disciplinary history that the company might have, and additional services, which we can talk to a little bit about that, which is once a company becomes trading on our market through either the QX or QB market, OTC Markets offers a number of tools for companies to engage with US investors, which is something really important when you think about it. If you're a company that's listed in Mongolia and you start trading here, part of the requirement is that you need to be able to provide some outreach to potential investors there. Just because you're here means that you also need to do some activity to make sure that you're aware, whether it's through marketing activities, through our resources, non-deal roadshows, or other activities like that. And then step 11 is designated key company contact information for compliance and billing purposes. In the last few steps, background checks, like we just discussed before, having those documents available, looking at supplemental documents, uploading shareholder reports, reviewing, signing it, and then pay the application fee via wire or credit card, and you're submitted. The typical processing time we see once an application is submitted is approximately 6 to 8 weeks. We'll go through the application, we'll follow up with the person that filled out the information to provide any questions or any responses that we need to be able to move forward. And that's pretty much the process for QX, and QB is very similar as well. So as part of the QX or QB application process, for companies that don't have a US ticker symbol, OTC Markets has the ability to conduct what we call an initial review, where we qualify and we apply for a symbol with FINRA. And in addition to being governed by the SEC, OTC Markets is also governed by the rules of FINRA, which is the Financial Industry Regulatory Authority, which is an organization that overseas broker-dealers here in the United States. These are the entities that execute trades through our platform on behalf of their clients. So that's something we can do on our side, because again, not all companies will have a ticker when they first apply, because that's what the US investors are looking for on their side, which makes trading happen here in the US. I also wanted to provide a high-level overview of how trading works on our market and how US investors can purchase your shares in the local market. So this slide shows the flow of how a trade is executed. What will happen is that a US investor will go to their broker, and in most cases, it will be through an online trading account where they would see the stock that they would like to purchase. So in order to source the liquidity, this order will be routed through a broker in the local market that will execute the trade on the broker's behalf in that local exchange. The trade will settle in the local market, and that will be held in a custodial account on the investor's behalf. On the US side, the investor will see that stock in their brokerage account as a US dollar security, which is what they would have with their other securities as well. So the trading and the settlement piece is very straightforward from our side to be able to do for companies and stocks that are outside the United States. The next step I want to talk a little bit about is about blue sky compliance and why it's important for U.S. investors and the OTC. A lot of companies, individuals don't know what blue sky laws are, but blue sky laws are state laws that require that regulate the solicitation and sale of securities here in the United States. So each U.S. state has their own securities laws that, in order to sell or solicit shares to investors in those areas, they have to be covered. So they're designated to help protect investors from fraud and help make more informed decisions at the state level. Companies that apply for OTC QX or QB, on their behalf, we obtain blank exemptions for those shares to be solicited by the brokers, which makes it very important. An example of blue sky companies that have them on the left-hand side is a company in London called EasyJet that trades on our QX market. They have blue sky coverage in almost all the states in the US, whereas the one on the right-hand side, Norwegian Air, which trades on our lower pink level, where this disclosure is not being made and they haven't applied to QX or QB, their disclosures are a lot less. So what happens is that brokers cannot go to their clients or to solicit those shares to be purchased. Family offices or other small institutions can't promote those. They can't put them into their investments unless they're blue sky compliant on that side of things. So that's most of the trading and the listing application process on our side. Here's a little list of some of the companies that are listed on our QX market. Many of them are known, established, and well known by most of the individuals out there, which makes the OTC markets very attractive in that side of things. And I know there will be questions that come up. I'm excited for some of the questions that the group may have on here. Our contact information is here, my phone number, as well as my email address for the team. If you have any questions outside of this presentation, I would welcome the opportunity to engage with any of the participants that are on this call today and to ask any questions that may be a little more specific to your needs. So with that, I think we're open to questions that we may be having on the call here.
Okay, so thank you, Stephen. Is there any questions from the audiences? Please leave your questions to the chat section. Do we have?
We have one question on the Q&A section.
Okay, so the first question is, what type of securities other than ordinary shares and ADRs are traded on the OTC markets? That's primarily the main ones that are traded on our markets. The only other one that we trade in some minimal area is there's warrants that trade on our market, but for the most part, we don't do. It's mostly we are an equities driven market for trading. And as you put in your question, primarily ordinary shares and ADRs as well. And they both trade the same way. They execute a little bit differently, but that's the majority of the shares that trade on our markets. Next question is, how do broker dealers in the US and Mongolia establish connectivity with the OTC Markets platform? Is a new platform required, or can existing systems be integrated? Which is a great question. And that's one of the areas that we're working with the Mongolian authorities right now, is to make sure that there are broker dealers that are in Mongolia that can execute trades with US investors. And that's typically something that happens outside of our markets that we're working on right now to make sure that we can establish the Mongolian Stock Exchange as a qualified foreign exchange. Because if you think about it, we can qualify an exchange, but if trading can't happen through the US brokers and the local brokers to execute trades, then it's not going to be an experience that is going to be worthwhile for the participants. So that's something that we're working on right now to make sure that there's connectivity between the US and broker dealers and the Mongolian broker dealers on their side to execute and settle trades. Okay, next question is, how do you view the Mongolian OTC market? What would you advise for organizations to be mindful when raising funds from the OTC markets? So that's a great question. I'm actually not too familiar with the Mongolian OTC markets side of things, but I think the main part of any type of OTC market is not just the trading piece that you can provide to the community, but it's also has to do with the companies themselves. How would the OTC market in Mongolia be promoting those companies? How would they be able to be promoting those companies to investors through investor seminars? What OTC Markets does here in the United States is that we have a number of investor relations tools that companies can take advantage of when they list on the QX and QB markets. One of those is the virtual investor conference series that we manage, where companies can go on and tell their stories. Because as many can realize on the call here, companies matter. They make the difference of who's trading on our markets. And a lot of that is being able to give the companies a platform to be able to talk about what they do so that they can increase interest in what they do and be able to grow through those markets. Next question was a cost question, which is very good as well. So both to apply for and to list on the OTC markets. Both the OTCQX and the OTCQB have an application fee of $5,000 US. And once the companies qualify and go through the QB application, the annual fee is $15,600, and the OTCQX annual fee is $25,500, and that's an annual fee. No additional fees that apply for those areas. Any other types of activities a company does would be something that be up to their own discretion. Okay, next question is, will trading by US investors impact the share price of Mongolian companies? I guess the answer to that would be, you're improving the trading and liquidity of those securities in the Mongolian market. And the idea was that if more US investors are investing in the company, then the idea would be that that would impact how the share price moves with Mongolian companies, keeping in mind that the Mongolian currency would be converted into a US dollar currency on our side for trading to happen. So the idea is that we are looking to increase the trading volume and liquidity that goes back to the Mongolian markets for those companies to be able to make that a better investment opportunity for US investors to be able to participate in the markets in Mongolia. See, next question. If the MSC obtains QFE status with the OTC markets, would Mongolian companies be exempt from the SEC reporting requirements? And the answer would be yes. And that relates to the SEC Rule 12G32B, which allows companies to not have to do SEC requirements based on them providing the same disclosures to us that they're providing to investors in Mongolia, making those disclosures available to us, and making sure that you're in compliance with your local market as well. So that's the main advantage of being on the OTC markets, is that you don't have the same requirements as you would be with an SEC as an SEC registered company as well. Another question is, unless an overseas issuer stock is listed on a qualified exchange like Hong Kong, Singapore, they're unable to issue securities to the US markets. Just to clarify, so we're, as a secondary market, when an international company chooses to trade on our markets, they're not issuing any new shares. That share purchase goes back into the local market. So the trading actually becomes a lot easier, because it's not like a NASDAQ or New York Stock Exchange listing where you're issuing new shares. So you end up having two pools of shares, one in your local market and one in the US. So the companies aren't issuing new shares in the markets itself on our side, but we do require one of two requirements to be on the QX or QB markets, which is the company being on a qualified exchange like Hong Kong or Singapore, or if they're an SEC reporting company, which many companies are already, that either start off as New York Stock Exchange or NASDAQ companies and get delisted, but they're still reporting in SEC documents. Those are companies that end up actually qualifying for our markets as well. And another question is, being listed on the exchange, does the requirement apply to all companies, domestic and international? When it comes to OTC markets, the area that we're mostly focusing on is the international side of things. And the SEC Rule 12G32B really applies to foreign private issuers on their side. We do have a number of companies that are based out of the US that traded through our markets. They have different reporting rules on our side, but for the most part, when we're talking about international companies located outside of the United States, we're talking about companies that are qualifying under the SEC exemption rule 12G32B. And I think that's the questions we have in the queue right now.
Okay, so I think our participants got enough information. So I think it seems we have reached the end of the webinar. So we have a closing remarks from the Capital Markets Mongolia, Mr. Zolbayar.
Hello.
Yes, we can hear you.
Oh, thank you, Stephen.
Hmm.
So it's been a few months since we met at your office during
Yes.
our Mongolian Investment Week in New York City. So
Yes.
it's a pleasure to see you again. So
Great to see you as well.
I'm very happy. Yeah, I'm very happy at the progress we made so far. Especially, I would like to thank Chairman Barseghan and FRC team, and also as well as the OTC Group, because at CMM we work to improve Mongolian capital markets and opening new opportunities in Mongolia. So what OTC Group really offers is critical for Mongolian public companies, and access to global investors, and then the liquidity issue are one of the biggest challenges in Mongolia. So I hope soon, like, we will see more MSC listed companies on OTC market in New York City. So finally, by the way, like, CMM is organizing Mongolian investment event forum with FRC in Singapore this November 4th and 5th. I think our participating companies will have an opportunity to meet OTC Group in person, because OTC Group has an office there, right, in Singapore. So several MNC listed companies, including the banks, will be there in Singapore. So it would be a great opportunity for both sides. So this is all I have. Thank you, Stephen. I hope to see you soon.
Thank you very much. We look forward to meeting the delegates in Singapore in November, and we'll be in touch. And again, we're happy to answer any questions companies might have. And we really appreciate the time you were able to spend with us today. I know it's the end of the day in Mongolia, so thank you for being with us, and have a great evening.
Thank you, Mr. Zolbayar,
Thank you.
for the closing remarks. So in closing, thank you, Stephen, for your insightful and informative presentation, and your expertise and clarity have provided us with the valuable knowledge and about the OTC Markets Group. We truly appreciate the time and effort you invested in sharing this information with us. And I also want to express my gratitude to everyone for participating in today's webinar session. I'm sure each of you has gained valuable insights. See you next time.